Hey, richest you money maniacs, welcome back. I'm really excited to have you on this particular video series. In this series, what's better than a 401k? What's better than a mutual fund? What's better than real estate? We're going to talk about that in this video, but before we go into that, make sure you hit that like button and definitely click the subscribe button. Here we go, right into it, the Better Than series. Hey, richest you money maniacs, Tom coming at you from Richest You. So glad to have you back on this series. This is part of the Better Than series where I talk about what's better than all those different retirement investment opportunities out there, and there are a lot of them. So what I'm talking about is the difference between a laser fund, which you've heard me talk about a lot, and all the different ones. Now, in this particular video, we're going to be looking at the difference between a laser fund and a mutual fund. Now, it's important, again, in case you haven't watched those other videos, for me to just describe really briefly what is a laser fund and why is it so special? Why is it so amazing, Tom? You're always talking about it because it's just that incredible. A laser fund, technically, is a universal life insurance, tax-advantaged insurance contract that's indexed against the market. Now, it's important to understand that it's indexed against the stock markets, but it's not in the stock market. That's very important to understand. That means that when the stock market goes up, the laser fund goes up too and makes you money. When the stock market goes down, the laser fund just stays where it is. While stocks are going down and taking your money away, right? And all those other mutual funds are taking your money away, the laser fund just stays right there. Okay, now there's a whole bunch of different reasons for that, and that's in another video that'll explain in more detail exactly how a laser fund works. But for right now, the most important thing for you to understand is that's what a laser fund technically is, and when it's structured correctly, it takes advantage of code that's in the IRS code that's 100 years old. Now, a laser fund also used to be known as the rich man's Roth. So it's something that's been around for a long time, and the government has no interest in changing that law anytime soon. So here's the really wonderful thing about it. You put money into it that's already been, you've paid taxes on. So it's after-tax dollars. Once it's in that laser fund, it's safe from ever being taxed again. But then even better is when that laser fund earns you that interest because it's indexed against the market, that interest that compounds and makes your laser fund bigger is also tax-free. But you can also borrow against your laser fund, and the money that you borrow doesn't make your principal go down. So your principal's still earning full interest every year, and you have access to this other money. And the interest that you pay on that loan, oh, by the way, that's tax-free. And this loan, oh, by the way, you never have to pay that loan back. Because if you don't, the death benefit on your your universal life insurance piece will pay the loan off first. So you just borrowed against your own money and you have two of your own money working for you. Oh, and you never have to make that payment. You never have to pay it back because the death benefit will cover when you die. So the laser fund is designed to take advantage of maximum contributions, payments, premium payments into the insurance piece with a minimum death benefit. Now, most people say, why do you want to do that? That's silly. I want to pay for insurance so that if I die, my family's taken care of. Well, guess what? It has a minimum death benefit, but it still blossoms 2.5, sometimes more times than the amount that's in the insurance piece anyway. So it still does blossom. It still functions as insurance, life insurance. But you're not really using a laser fund for when you die. You're using a laser fund to help protect your money and have access to your money tax-free while you're alive. That's the beautiful thing about the laser fund. Now, there's several other parts and features and details about the laser fund and how it works and the myriad of ways that you can use it, but that's not what this video is about. This video is about comparing a laser fund to mutual funds. That's what the Better Than series is about. So right now I'm going to list the optimal features that your instrument, your retirement instrument or your investment instrument should have. Now, another important thing to remember with the laser fund, because it's insurance, technically it cannot be classified as an investment. And you don't want it to be classified as an investment because insurance is tax-free. Investments get taxed to the hilt. They take huge chunks of your investment. You worked hard to invest that money. You worked hard to earn it and then be able to invest it and try and make money with it. And they take it in large chunks. Laser fund. That's my preference. Okay, so now another thing you need to remember too with these videos and all of my videos is I am not a tax accountant. I am not a certified financial planner. I am only sharing with you information that I've learned and used for my personal life. And that's it. So it's really still up to you to go do your homework. So make sure you do your research. In fact, for a laser fund, I would strongly encourage you to go into the description down below and click on the link for liveabundant.com. And of course, also subscribe to Doug Andrews' channel, 3-Dimensional Wealth. Great information. He's the guy that actually coined the phrase laser fund. Super genius, really smart guy. Okay, so here are the optimal features that you want in any investment instrument. The first optimal feature is liquidity, so you want to be able to use it and have control of it. The next is safety. You want your money to be protected from market loss. The next feature is you want predictable rates of return. The next feature is you want tax-free access to your money. The next feature, tax deferred. The next one is tax-deductible payments. The next feature that you'd want is tax-free wealth transfer. Absolutely vital. You should be able to give your gift of wealth that you worked your whole life to whoever you please without having to pay taxes on it again. The next optimal feature you want is penalty-free. You want to be able to have access to that money and have penalty-free. You want to be able to leverage your retirement instrument or your investment instrument. You want to be able to leverage that. It's yours. You own it. Why can't you leverage it? You also, as a next optimal feature, want to be able to use it as collateral. It's an asset that you own. You should be able to use that as collateral. You also want to have a disability benefit built into any instrument that you have. You need a disability benefit. Now, those are all optimal features for any investment tool or any retirement plan that you intend to use. So let's talk about the mutual funds and exactly how they stack up according to those features that you want, those optimal features. So here we go. Mutual funds. Do they provide liquidity and ease of use and control of the money? Yes, as a matter of fact, they do. Mutual funds actually provide that. Do they give you safety? Are they protected from market loss? No, they are not. Mutual funds are in the market. Mutual funds are a combination of common stocks in a fund. You are absolutely invested in the market and you are not safe. Do mutual funds give you a predictable rate of return? No, because they're in the market, and the market, you can't predict the market. Don't even begin to try. In fact, this week, we saw what happened when people tried. They lost big time. Do mutual funds provide tax-free access to your money? No, they do not. Are mutual funds tax deferred? No, they are not. In fact, you don't really want them to be tax deferred. You'd rather pay the taxes now while the tax rates are low, because the tax rates always go up. They never come down. Remember that. Pay your taxes as quickly as possible at the lowest rate they will ever be at, which is where they are right now. Do mutual funds allow for tax-deductible payments? No, they do not. Do mutual funds allow for tax-free wealth transfer? No, they do not. Mutual funds, you pay taxes again when you transfer that wealth to somebody else. Is it possible to access money in a mutual fund penalty-free? Yes, it is actually possible. There are certain ways that you do it if you structure it or if you access the money in a certain way, but it's very restrictive. And so yes, it is possible, but they don't make it easy for you, that's for sure. Can you leverage your mutual fund? No, you cannot use it as leverage. Can you use your mutual fund as collateral? Yes, as a matter of fact, you can. Well, isn't that nice? Of all these things that you can't do, you can actually use it as collateral. There's one good thing it can do. Does a mutual fund have any kind of disability benefit? No, it does not. Okay, now let's talk about these optimal features again in terms of the laser fund. What does the laser fund have compared to the mutual fund? Is the money in your laser fund liquid? Is allowing you for use and control of it? Yes, it is. Does it provide safety so that your money is protected from market loss? Yes, absolutely it is. Does the laser fund provide predictable rates of return? Yes, it sure does. In fact, it averages between 8 and 10% per year. In fact, this week when the market went down, I actually had a very interesting experience. My heart rate stayed exactly where it was because I knew that my money was safe in my laser fund and wasn't going down below zero. That everything I had put into my laser fund stayed at where it was while everybody else who was in the market was losing their shirt. Does a laser fund give tax-free access to your money? Yes, it sure does. Isn't that wonderful? Tax-free access to your money. That's how it should be. Does the laser fund offer a tax-deferred option? It does, actually. I wouldn't encourage you to use that for obvious reasons because taxes always go up. Pay them now, protect your money in a laser fund so that when they do skyrocket to 60%, according to the Office of Accountability for the U.S. government, you won't be paying 60%. You'll have already paid your taxes now and you'll be safe in a laser fund. Does a laser fund offer tax-deductible payments? No, it does not, because you don't want them to be tax-deductible. You want to pay your taxes now so that you can legally protect your principal and legally make interest for the rest of your life tax-free. Does the laser fund offer tax-free wealth transfer? Yes, it does. Feel free to give your laser fund to whoever you want. Does the laser fund offer penalty-free access to your money? Usually. Now that's important because remember, when you work with somebody on a laser fund, they must be a laser fund expert. You must work with someone who has decades and decades of experience on how to structure laser funds so that they remain tax-free and penalty-free when you access the money. It's very important because people will structure a laser fund to operate appropriately, but then they'll go in and try and grab the money at the wrong time or the wrong way, and they'll violate TEFRA and DEFRA laws. And so you got to be very careful who you pick to manage your laser fund for you. Can you use your laser fund as leverage? Yes, absolutely. Feel free to. In fact, I'm going to do that just about every day of the week soon. Can you use your laser fund as collateral? Yes, you sure can. In fact, that's how I'm going to buy several businesses. Does the laser fund offer disability benefit? Yes, it does. So right there you have it, a comparison of mutual funds versus the laser fund. And it's a significant difference. Each of these videos in the Better Than series is going to prove beyond the shadow of a doubt that the laser fund, when structured properly and operated and managed and accessed properly, completely blows away every kind of instrument that's out there right now. In fact, it doesn't make any sense for you to use almost any other type of investment opportunity. So that's a broad sweeping statement. So I'm not saying that you shouldn't participate in other types of investments. What I'm suggesting is that perhaps you should include laser funds in them like real estate to make sure that you leverage your money and the real estate to its highest potential tax-free. And actually, I have a video that you can actually watch that describes how to use your home equity to protect its value while the market is up. Now, you should probably do that as quickly as possible if you're thinking about it. So watch that video right away, because since the market crash, you can be sure that home values soon are going to be declining as well. Because once the economy slows down, guess what? Nobody can afford to buy anything, let alone homes, and they were already expensive. All right, so now you have the comparison of mutual funds versus the laser fund. I hope that you liked this video and you found value in it. Definitely give us a thumbs up if you liked it, and absolutely subscribe to the channel so that you'll know every time we put up new videos. Thanks for tuning in, and we'll see you on the next Better Than series video.